Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of XRP, taking a look at what's been going on most recently, what we think is going to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe. Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you haven't yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out today? And also, whilst in the description below, you might want to check out some of the other useful links that we have down there. Everything from Bybit to BitGet to TradingView, all the way through to the community-led Cheeky podcast, Patreon services, and a whole host of additional things. So if any of those are of interest to you, why not check them out as well? Okay. Let's get into this. XRP paired up with USDT on the hourly chart. Binance is the data source. Now, XRP has been an incredibly difficult read. It's been going through some very violent, extreme FOMO-driven pumps to the upside. And then at the same time, it's also been seeing some really significant drops that have invalidated various different wave counts that we've had going on. This makes it very difficult to get a good understanding as to where things are at the micro level. What we can do, of course, is trying to zoom out a bit, take a look at the bigger picture and understand whether or not we have some kind of long-term growth here, or whether or not we're actually just looking at some kind of short-term decline before we can actually get into anything kind of meaty, right? Now, as you can see in front of us here, this is still a valid count, and we're still tracking a potential 5-wave structural move to the upside. Now, fifth waves and wave ones, actually wave 1 or wave 5, these two here, can sometimes be a little bit difficult. As in, sometimes these are leading diagonals and you don't normally have a typical kind of what you'd expect for wave 1. And then the same also at the end here. Sometimes you have an ending diagonal rather than your standard kind of impulsive structure. Now, the wave 4 has come down reasonably well. Okay, and this actually creates a higher expectation of wave 5. That being said, that would only happen under a very specific impulsive structure, which I don't think we actually have here. So I do think that actually we're going to see very poor kind of fifth wave ending here. It should at least come up to the wave 3 though, but you know, we'll see how things kind of go, and if things break down, they break down, and we can talk about those. But at the moment, this is still valid. The invalidation of this structure is at 36.22 cents. Okay, so unless the price comes all the way to this dash line and lower, then you know this actually has to happen. Okay, so I don't think necessarily we're going to go quite as high as we were hoping, and that's because of this move here coming down. Okay, so this basically has now created a really poor wave 5. Okay, this is basically looking now more like an ending diagonal structure, and that will be consistent of, and I'll go through what that looks like in a second, but it will consist of basically 3 waves internally rather than 5 waves internally. So just keep a close eye on that. It'll be 5 waves broken down into 3 waves each. So yeah, it's kind of where we sit with this on this kind of level. Now, as I kind of zoom out a little bit, you can kind of see, okay, well, we've got 3 waves down, 3 waves up, 3 waves down, 5 waves up. That's a type of corrective structure known as a 3. That's a really bad 3. 3, 3, and 5, right? So basically, it is 3 waves coming up here. It is 3 waves coming down, and then finally 5 waves going up. 3, 3, 5 is a type of correction and would be considered an A, B, C. Nothing more than that. This means that we are not trending to the upside. This means that we are not, you know, just going absolutely to the moon, you know, a moonshot, no stops between here and there, that kind of thing. This is basically an indication, actually, this is a short-term move, and the move to the upside will eventually come to an end, and it will pull to the downside. That's an unpopular opinion. People don't like to hear it, but that is the structure. And if that's also just the structure, if we complete a 5-wave move like this, if we do not complete this 5-wave move and we break down and we come down lower than the 36.22, well, that structure is definitely not impulsive. That's definitely not a trend, and it is definitely short term. So even if you wanted to ignore these 2 sets of 3 waves this side, the 3 up, 3 down, and just draw a dashed line, let's just go ahead and hypothetically, I did this before, but hypothetically just say ignore everything to the left of there, and we're only looking at this. This would have to be 5 waves if you want to be bullish on XRP right now. Okay, there would have to be 5 waves. So if it doesn't and it breaks down, then you've got nothing to be bullish about here. Okay, so let's just kind of break that down into real true logical steps. We've got a corrective pattern. Even if the best case scenario, you draw that dashed line and you ignore everything on the left, this still has to complete 5 waves, which at the moment isn't looking the best. So let's kind of keep things real. Let's not just FOMO into something just because, you know, Bob on the internet says it's going to go to $10,000. Let's and I don't know a Bob, by the way, guys. I'm just being sarcastic, which is never good, is it? But you get the idea, right? Let's keep it real. Let's kind of break this down into reality rather than fiction. So here we are. This is what we've got. We've got a 5-wave potential structure to the upside. This is the end of a corrective structure, in my opinion, and from here we will break down, and that's if it happens that we get there. If we don't get there, then we break down beforehand, as in we could just break down from here, right? So there's not a scenario where this doesn't come down. Okay, so only difference is where does it go down to? Okay, so if we break down from here, we could go down to new lower lows, right? And if we have a 5-wave structure, then I wouldn't necessarily expect it to come all that way down. But again, as I said, I would have to ignore these 3 waves on the left in order to really think about not coming down lower than this origin level. So let's take a look at this 5th wave. Okay, we know that this is actually short term, and we can take a look at this and think, okay, what's going on here? What do we actually have going on now? A diagonal. Let's talk about this for a second. Okay, under a regular 5-wave structure, your 5th wave would comprise of 1, 2, 3, 4, 5 waves, right? And they would be consisting of 5 waves each, as in each of these waves inside here, you'd expect there to be 1, 2, 3, 4, 5, like so, right? And that would be broken down all the way through here. So what do you get when you come down to this little wave 1? Well, you don't see 5 waves, right? You go 1, 2, 3. We never hit that 5th. It broke down. It went lower than wave 1, so it's not a 5-wave structure. So straight off the bat, that doesn't look right. So you actually start thinking, okay, well, what is it? What is actually going on here? Is 1, 2, 3. It's A, B, C. Okay. Then you come over this side and you go, okay, how many down? 1, 2, 3 going down. And then you're looking to go up. And again, you're looking to go up in 3 at this point. Okay. So you go 1, 2, maybe 3. Though that hasn't actually played out. There's a small kind of dip right in the middle there. You might argue that is, but we don't know what's going to happen just yet with that. We'll talk more about probabilities in a second, but you kind of get the idea. You'd have 3 up. Now that wave 3 would be shorter and under a 3-wave structural point, and so would the wave 5. So all of a sudden you start to realize you're not necessarily going to get to this target at the top here. So let me come up to a bit of a blank screen and I'll show you. So basically an ending diagonal is comprised of 3-wave structures. Wave 4 and wave 1 under a diagonal structure does in fact overlap. Each of the sub-counts is a 3-wave structure. Okay, so you end up with 3 waves up, 3 waves down. You go 3 waves up into wave 3, 3 waves down into wave 4. Then you go finally 3 waves up into your 5th wave, and it looks like this. A bit messy, it's a bit all over the place, right? Lots of overlaps going on. And it's an ending diagonal. Let's talk about the rules of the ending diagonal. Okay, what do you look out for? What would create invalidations in these things? Well, straight off the bat, let me grab an arrow. Wave 4 is allowed to cross wave 1, whereas under an impulsive structure, wave 4 is not allowed to cross wave 1. So an ending diagonal or a leading diagonal, the wave 4 can cross the wave 1. The wave 3 cannot be the shortest wave. Okay, this means that either wave 1 or wave 5 are going to be shorter than wave 3. If wave 3 is the shortest wave, then it's not an ending diagonal. And that's your rules. It's quite straightforward, right? So as long as your wave 3 doesn't actually, or isn't the strongest, or isn't the smallest wave, essentially everything else is kind of fair game. And obviously everyone has to include 3 waves. Let me just put that back a second. Okay, each of these has to be 3 waves. You can't have a 5-wave structure in there. If you have a 5-wave structure in any of those, it's invalidated. Okay, so only 3-wave structures inside them. Okay, so hopefully that makes sense. But that's what I'm thinking is going on here with XRP. Now, what's our minimum expectation on this? The minimum expectation is going to be here at 55.9. Okay, we might just wick above it, for example. It might be just really short, and it might just go above this wave 3 high point. At that point there, we break down. That would be our wave 5 done, and from here we can just go down. Okay, so this is why XRP has been a very difficult read. There's all of this great stuff happening over here, really strong moves, and then over this side, it actually no. And this is actually driven from how these structures tend to work. So I speak about this a fair amount, right? If you've got 5 waves like this, right? This is your standard impulsive 5-wave structure. Okay, you would expect it to be 5, 3, 5, 3, 5. Okay, but we're not talking about that. I'm going to talk about what's driven behind these. Okay, so wave 1 is usually considered to be a fake wave. Okay, as in it's a fake pump, no one wants to buy it. Wave 2 is where basically people feel that they were right, it's fake, it's going down. But this is actually where the whales buy. Okay, then up here at wave 3, retail investors feel that they missed out. But this is where the whales sell. Okay, then the wave 4, this is where the FOMO starts. That's a really bad way of writing FOMO, but FOMO. Okay, and this is retail. Okay, so understanding what's going on here is really interesting. It means that this final 5th wave up higher is driven just from retail money, and it is weak. It's usually the weakest move in all of it, because it's not really driven from any good volume. It's basically just retail money dragging it up that last little bit. Okay, but all your institutions, your whales, your big players, they came out at the top of wave 3, bringing the price down to wave 4. Retail jumps in, take it up into a final 5th wave. And that is why I come back down here, you see moves like this. They're not strong, they're not decisive, they're all over the place. This is emotional. So you end up with things like these ending diagonals. Sometimes it even happen in the leading diagonals. So understanding how the structures are set up here for XRP is really important, because this is trapping out a lot of people. A lot of people getting liquidated from XRP trading, leverage trading, all that kind of stuff, right? And it's because you're not really looking at it necessarily from or through a different lens, right? It's almost like a lot of people are retail investors anyway, are looking through it and looking at XRP as, oh my God, it's going to the moon. I need to get in now before it's too late. The lawsuit this, the lawsuit that, and speculate this, speculate that. But essentially, the structures are very, very clear. Once this completes, I would be expecting at least a 50% reduction of this entire move here, right? So we'd drop down to at least half of this structure. If we come up to this previous high just here, we'd come down. We'd be looking at coming down lower than 40 cents, in my opinion. And that's just a basic standard if we were to think of this as a trend to the upside. The fact that I don't think this is a trend means that it's all fair play to come all the way back down here again. And it wouldn't be the first time that this has happened in the case of XRP either. So it's important that we understand, you know, there's lots of different ways of looking at this data. I could draw trend lines on there. I could draw a load of resistance and support lines on there. I could use a whole host of different indicators. Or I can take a look at the structure of the candles and the patterns and tell you how people have been behaving. And essentially that is what Elliott wave theory is doing. Elliott wave theory is telling me the behavior of the people who are invested. We know typically how these structures are made up. We know who's considering what. This here is basically considered fake by retail investors. This is the, I told you it was fake, but the whales are buying it. Oh shit, we missed out on the opportunity. I'll wait for the dip. We'll buy the dip, but actually nothing ever happens afterwards. Okay, and this is because actually it's being driven, it's being forced into this direction by the whales who are actually buying it. They're buying the volume and selling the wave 3. They're only interested in the wave 3, so they don't want to be buying wave 5. Wave 5 is all retail, and that's why you have things like this. So knowing how these structures break down and knowing how they work, you can use this to your advantage. Now, obviously, I'm not a financial advisor. This is just my thoughts and opinions on the data in the charts as I see it using Elliott wave theory. But let me know what your thoughts are down in the comments below. Do you think that we're going to be shooting up massively over the next kind of week or so, or do we think that actually we're going to be dropping down really significantly? Now, the stochastic RSI shows us that we are likely to see some kind of move to the upside next. I don't think this wave 3 is finished, so I do think we have to push up higher here. On the 4-hourly, we do need to go down. We're overbought, right? We need to reduce the price in order to become oversold. On the 8-hourly, same story. We're overbought. We need to reduce the price to become oversold. On the daily chart, we're actually in a really good position to see a bit of a run. So we could potentially push up on the 1 and daily charts. That being said, the 4 and the 8 hours aren't going to support it for long enough. So do watch out and do expect some volatility within there. The weekly obviously needs to go down. So for the most part, we are where we are, and we can see that actually we're going to experience a reasonable amount of volatility. We're going to push up, we're going to push down, we're going to push up again. And I do think this is going to be a series of different wave counts that are basically going to account for this extreme volatility of what retail investors are creating through emotional trading. Guys, I'm going to leave the video there. If you have found it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Guys, until the next one, fantastic day.